Let me show you something strange with money in Canada. You could own a house and still not realize you have access to six figures of capital. I'm not talking about savings. I'm not talking about winning the lottery. I'm talking about something called a HELOC, a home equity line of credit. And today I'm going to explain how the interest works, how the repayment works, and how some investors use it to grow wealth through real estate. They can't invest in real estate is simple. They think they don't have enough money. Maybe you've said something like, that property looks good, but I can't afford it. Or maybe someday when I have enough money. But here's the reality. Many homeowners already have money sitting in their property. The problem is they just don't realize it. I remember the first time when someone explained this to me. At the time, my mindset was very simple. Work hard, pay your mortgage, save money, and avoid debt. That's what most of us are taught growing up. So when someone told me that I can use my equity to invest, I was confused. I thought, why would I borrow more money? Because most people growing up hearing the same advice is that debt is bad. Avoid borrowing. Play it safe. But when I started learning about real estate investing, I realized something important. Not all debt is the same. Debt used for consumption can hold you back, but debt used for assets can help you grow. So today, I want to break this down very simply. What a HELOC actually is, how the interest works, how the repayment works, and how some investors use it as a short-term tool for things like home renovations. So what is a HELOC? HELOC stands for a home equity line of credit. In simple terms, it is a credit line secured by your home. The bank looks at three things: the value of the property, your mortgage balance, your financial profile. From there, they determine how much you have. Let's say you have a house worth 500,000. Your mortgage balance is around 320,000. That means you roughly have $180,000 of equity. Banks usually allow access to a portion of that equity through a HELOC. And here's something most beginners don't realize. A HELOC is not like a normal loan. It works more like a credit line, similar to a credit card, but secured by your property, which means the interest rate is usually much lower. How HELOC interest works. Most HELOCs in Canada use a variable rate. That means the rate moves with the prime rate. Usually it's something like prime rate plus a small percentage. Example, a prime rate might be around 6.7%. The bank might add 0.5%. So your HELOC interest rate might be somewhere around 7.2%. You only pay interest on the amount you actually use. So for example, your HELOC limit is 100,000, but you only withdraw 20,000, you only pay interest on that 20,000. Here's an example. So if you borrow 20,000, interest rate around 7%, that's roughly 1,400 per year, around $115 per month. Pause for a second. Think about that. Access to 20,000 and the required monthly payment is roughly around 115. Now you understand why investors pay attention to tools like this. Now, this is the part that surprises many beginners. Most HELOC payments are interest only. That means the bank only requires you to pay the interest each month. You can pay more if you want. You can reduce the principal, or you can pay off the full balance. So for example, if you borrow 30,000 with an interest rate of 7%, so your monthly interest payment is somewhere around $170 to $180 per month. You could pay only interest, or you could pay more to reduce the principal faster. It's flexible. But this is where people misunderstand HELOCs. They hear interest payments only and think that sounds dangerous. And honestly, it can be dangerous if used irresponsibly. But when used strategically, it can also be a useful tool. How I personally use HELOCs. For me, a HELOC is not a long-term loan. I use it more like short-term capital, especially when working on properties that need renovations. So for example, sometimes a property needs upgrades, new flooring, paint, repairs, improvements to increase rent. Instead of using all my savings, I sometimes use HELOC funds for the renovations. Here's an example scenario. Renovation budget 30,000. I use 30,000 from the HELOC, renovate the property, improve the condition, increase rental value. Once the property is stabilized and producing income, the cash flow from the property helps pay down the HELOC. So the HELOC becomes a short-term tool. The property becomes a long-term asset. So the HELOC itself is not the investment. It's the tool that helps improve the investment. Some investors also use HELOCs for short-term projects like flips. They buy a property, renovate using HELOCs, sell after improvements, pay back the HELOC from the sale. Here's the mindset shift that changed how I looked at opportunities. Many beginners say, I don't have the funds. But once you understand equity, you realize something important. Sometimes the funds are already there. They are just inside your property. So instead of asking, do I have money? The better question becomes, does this deal make sense? If you're new to real estate investing in Canada, start simple. Focus on owning your first property. Build equity over time. Learn how financing works. Talk to a mortgage professional about HELOC options and use debt responsibly. Wealth is rarely built overnight. It's built slowly. One property, one decision, and one lesson at a time. Tools like a HELOC are simply part of the financial system investors learn to use. If you're someone living in Canada trying to build wealth through real estate, start learning these financial tools early. Because once you understand things like equity, HELOC, cash flow, financing, real estate starts to make a lot more sense. If this video helped you understand HELOCs better, consider subscribing to the channel. I share real experiences about real estate investing, life in Canada, and building wealth step by step. And let me leave you with one final question. 5 years from now, do you want to say, I'm glad that I started, or I wish I started earlier? Because the steps you take today shape the future you build tomorrow.